Good afternoon, traders. This is Christian from Market Trade Group, and this is a quick end of day market video for Thursday, January 19th. So we've got one more day to option expiration. That seems to be one of the major effects that's kind of going on this week. A lot of other things going on too, including we're hearing about debt ceilings and all that type of and those types of things, along with we've got earnings season, right, which is just kind of beginning to see some of those bigger names that are reporting. Case in point, Netflix reported pretty good quarter. Listen, I bit my tongue here. I was going to say, hey, it doesn't look like people are really canceling their Netflix subscriptions because of the recession that everybody's hearing about. But you look and you do see things like Nordstrom down after hours. So, again, it could be that just kind of consumers are picking and choosing what they want to cut back on. And again, there's different levels of consumers as well. Of course, when you look at things like Tapestry and Capri Holding, the makers of handbags and things like that, luxury seems to be, some of the luxury buyers still seem to be at it in this market. So let me get back on track. But Netflix, this kind of lines up. You can see this 330.82. That's the top of value for the week. It did hit a high of 345. I would pay attention to what this is telling you here on the weekly chart. This has made a really nice run from the lows and has kind of been building that way, but you're going to have that resistance at 342.50. If you are not familiar with my charts and what I'm looking at, I use volume at price to come up with a significant resistance level and a significant support level based on all the volume and price activity of the previous period. We're on the weekly chart, so that previous period is all of last year's activity, right? That comes into play and becomes very significant, right? So that 342.50, that's going to probably cap the price, to some extent. And it'll be, whenever we get to one of these resistance levels, it could obviously be a target that you're taking if we do get to that level. But then it becomes, if we kind of get to it, it becomes an area to kind of watch and pay attention to. Just to kind of switch gears a little bit, I was talking about crude, which I think is also has been very interesting. You can kind of see where this crude bottom of value is for the year is $82, right? Again, where is this, what is this value area based on? It's based on just about a standard deviation of all that price and volume activity. So it becomes very significant when you associate things like a standard deviation around there. Also notice that 82 kind of lines up. Again, we use multiple time frame analysis at the Tribeca Trade Group. So, this 80 level is also important, and 80.42. So again, there's some resistance in here, and we'll see if this can close above 82. Also, from just an easy technical pattern, what I would be watching here in crude is whether or not it can get out of the pattern of making lower highs. Right here was your high for right, I think that's the high, almost the high for 2022. But regardless, you could say that this is a lower high, and then it really became a pattern of making lower highs thereafter. Here's another lower high here, lower high here. You kind of get what I'm getting. You get where I'm going with this, right? So if crude, right, and if you're really looking at energy names, this is what I tend to look at. I tend to see if crude is moving in the right direction, because I think on a day like this, that was one of your best performing areas, right? And of course, like if you look at nat gas, that is continuing to break lower, even though that is taken out a lot of downside levels. It still is trending lower, hence the 5-day moving average on my charts to tell you whether something is trading is trading in a downward trend or moving upwards or sideways. This has been sticking below the 5-day moving average for quite some time, and has actually gone down 50% from where it was just a couple months back. I mean, that's a big move in nat gas. Let's get over to one other commodity too, which I think actually stole the show today, excuse me, was gold. Gold has been continuing to trend, right? So this 200-day moving average was a barrier for a little bit, This is just where we were about a month ago, the 200-day moving average, and then we kind of went sideways here, and then kind of sneaky how this thing kind of, took off. At least I think it's kind of sneaky because it just had a lot of times where it tried to go higher and just couldn't really clinch the deal. We get to the new year, and gold has been trending. And again, look at the tight value area for the month. Sometimes that does indicate that a big move is coming. Again, look at this. Look at the narrowness of this value area versus some of the other ones, right? So again, it kind of goes along with, like, people like to look at moving averages, and when they get bunched up or coiled, right? It's the same way when you've got a value area that's tight. So where do I think crude is getting? Not crude. Where do I think gold, the shiny metal, is getting to? I think 1976. So that's about another, what, $35 up there. And then, that's a significant level in terms of where previous buyers and sellers have met up. So that's overhead supply. And then, so that would be an upside target to take. Weekly chart, you could see there's not really much going on there. So you kind of have to look to that daily chart. But again, that's kind of what has the momentum today. This was up 1.4%. Again, when you talk about debt ceilings and that kind of thing, and worries about that, it makes sense to me why gold is moving. Out of this space in terms of the gold miners, I like Royal Gold. It just seems a bit stronger than some of the other names within the group. Like if we look at the overall ETF in the space, GDX, you could see this took out this last VPOC, and again had a nice day today, up 2.6%, but not a huge amount of movement to the upside, and it still has to get through that value area that's 3268. All right. So if I were to play in the sandbox of gold miners, it would probably be Royal Golds, because look at the difference. Again, still overall, you look at the last few years, it's a very sideways chart. And it's already made a decent move. So I think you kind of have to keep that in the back of your mind as well, right? Still very sideways to me. Of course, it could break out of this sideways pattern and begin to kind of do better things, but a check back in here to 116 might not be a bad thing. A couple other areas just to kind of, like I said, I wanted to be brief with tonight's video, but some other areas that I thought were interesting for the day. The Chinese internet names, they excelled a little bit today. They are still sitting above the value area for the year on the weekly chart. So that I think that this trade is very much still in play, provided that it can kind of hold this previous gap up and maybe start to move. Again, this is the Chinese internet ETF, right? So again, it had a nasty day yesterday, an inside day today so far. So we'll need to see a little bit more confirmation out of that. BABA, which I noticed had some strength today. This is also, we go back to this weekly chart for a minute, right? Maybe the trade may not, I know this is a big move from the lows, but in terms of like a trending aspect, I would really watch this 120 level. So, if you think that you missed this move, zoom out a little bit and realize that this is not even trading above its value area. Again, inside value, you could see the top left of our chart, range bound, and once we break out of that value area, then we begin to trend. All right. So we're almost there. 120 is the level to watch. I haven't talked about the indices, which they're kind of important at this point. Here's what this looks like on the weekly chart. We're kind of capped here, right, by the 200 period moving average on the daily and the 50 period moving average on the weekly chart. A couple of things that I noticed today, again, looking at shorter time frames will give you some signals, for the day. Notice that we broke through the value area yesterday. No major hesitation there at the bottom of value. So we broke through support, sliced through that is the adjective that I'm using, or the verb, I should say, right? Sliced. Sorry, it's after hours, so I got to think about my grammar and use of those. But sorry, we did move through this very very quickly. And once we break through value like this, then it becomes a more complicated picture. If we can come in here and hold, then a bounce could be in play. But you could see that we broke through, and now we have to deal with a retest, right? So we did that this morning. That was the first hour of the open. We got right up to the bottom of value, right? There's a little momentum on the open, but this market right now just doesn't have the momentum to reclaim what we did yesterday. And that level to watch is 39.33. And there was a big sell imbalance too. I don't know if that was attributable to option expiration, but I think that there was like a $4 or $5 billion sell imbalance for the close. So again, like hefty money, moving around as we get to that option expiration for tomorrow. But 39.33, that's level two. Again, we tried it again at the end of the day, right around 2 o'clock, and that's another failure again. So again, this is super short term. So when I say failure, like, it doesn't mean death, to equities, but you have to kind of zoom out and see that there's this 38.60, which could still be in play if we don't start to kind of, if breadth doesn't improve and if buyers don't return to this market. NASDAQ, and I actually tried this today, trying to play the 80% rule, which again, you could look on the top left of your screen. Once we break into the value area, the 80% rule becomes into effect, which means that there's an 80% chance to go from one side of the value area to the other. We're kind of at the halfway point, and I was able to hit one target, and then we rebounded in the afternoon, but we really didn't go too far. So I would watch. If we start to kind of break those lows from what we saw today, you can potentially target 11,223. Or if you don't look at NASDAQ futures, I don't blame you. The level for the Qs is 270, 271.70. All right, and you can see we're kind of sitting at an indecision area. So again, if some of this price action, like if you're a little bit don't have conviction here, I don't want to say confused, but if you don't have conviction here, I don't blame you. We're kind of sitting right at this trend line, right, that's coming in here, which is the 200 period moving average, back and forth, back and forth. Remember, the best thing to do in a market that is very whippy like this, and where if something breaks down, it really gets hit hard. The best thing you could do is control your position size, control your risk, right? So if this market is frustrating you, your position size is too large, right? We talk about this all the time. You have to make adjustments. If you're not making adjustments as the market changes, you're going to find that you're going to get very frustrated on a day-to-day basis, because again, this is not the easiest market to trade. It was not the easiest market to trade in 2022. And if you're not making these adjustments, you're going to burn yourself out. That's a possibility. You're also going to get frustrated, right, with thinking that this market, so that's again, what you can control. You can't control the prices on your screen, especially as an individual investor, right? You're watching what institutions are doing, right? What you can control is the risk of what you're dealing with. And case in point, right, I'll give you an example, right? This deer was a name that we have been talking about, the industrial space, which was showing a lot of strength. Notice how this got rejected a couple of times. I was in this trade. I sold out of this yesterday. I did hit one or two targets in the trade because I established this at the bottom of value, and I did hit a target. I think the last target I took was 444. But that's not really important. It's important that you respect and you have a plan going into a trade. Look at this thing. Once it broke 430, it's just not something to mess around with, right? Because look at the performance. It's down 4%. So if you're not being disciplined in this market, it's going to cost you, because these things will just, once they break a range, especially to the downside, which is still concerning, right? Even though we've seen in the beginning of this year a lot of good things, a lot of participation really ticked up, breadth really improved, right? We did, of course, get short-term overbought. You could look at the NYMO. That's in stock charts. That's I don't think the new one has come out yet, but it's $NYMO, right? To see how overbought. Remember, the Nasdaq was up 7 days in a row. So again, you have to be realistic. With the Fed is still tightening, that's pretty darn good, to see the Nasdaq up 7 days in a row. Again, if you're not being realistic in this market, right, you're going to have a tough time knowing that the Fed is not your friend still. Okay. So again, stop prices are very important. And this is concerning to me overall to see something like this really get hit this hard, moving down from 440, all the way down to this, almost down to this VPOC here at 405. Couple names I'm watching for tomorrow. I'll keep it very, very short and sweet. Conoco, the energy stocks, I talked a little bit about crude, but I think this FANG is interesting in here. It was an ugly day for energy names yesterday too. Like they really got rejected, but some of these names are still holding above the 50-day moving average, and I wouldn't get too overly concerned about one day. As long as it holds the trend is the most important thing. Caterpillar, I actually did put on a little bit of a position here, and what I'm watching, notice, you go back to the S&P, for example, right? Notice how this broke through the value area. Caterpillar did not, right? So Caterpillar is hanging through that. So again, defining what your trading plan is before you enter the trade. If it breaks 244, a couple bucks down, I'm out of it. And that's the story. But if it can kind of hold in here, maybe it can retrace a little, back up to like 249, 250 is what I would be looking for. Again, you also look at this on the daily chart too. Does it make sense, right? That support. It does, because it's also the 20-day moving average on the daily chart. So again, if it can hold in here, perhaps it can build a little bit. Right, it's had a nice pullback. It got reached a high of 259, back down to 244. It looks a bit more appetizing here. I didn't like the the Alcoa results, down 7% today. But the metal space, which really showed some strength, remember this commercial metals just reported a couple weeks ago. This is also has a pullback into the 20-day moving average. So I'm watching, in this area, a little bit different company, but I still think if we look at the XME, the metals and mining, which does have gold miners in there too, if it can hold in here and hold above 52.81, I think that's somewhat positive. Last thing I'll say is, watch those defensive areas of the market. Look at consumer staples continue to move lower. So, I started off this morning putting out a note about how weak the defensive areas of the market look like. XLV is another one. Even though it finished positive for the day, I still think that this is suspect. It really got rejected at this 50-day moving average and at the bottom of value. So utilities is another one which finished down another 1%. So, this is actually like if the market could kind of hold on here, right, and the selling pressure could kind of abate for now, and if we start to see buyers step back in a little bit, it's actually not the worst thing in the world to see your defensive areas get hit the hardest. All right, but again, you look at like a few other groups too. So again, it's still kind of, this has to be straightened out or resolved in the next couple of days. I'm not saying solar has to lead, but still expensive stocks are getting hit. I associate solar, you going back to the couple of the energy charts, those are still cheap names. Solar is still an expensive name. You look at the valuation in some of these names, they're super expensive. So again, getting hit like this down 4.7% still, doesn't bode well for high growth, in my opinion. All right, guys, that is it for today's video. Have a great night. See you tomorrow.